Hi, I'm Garrett Cayet, SFMG's Chief Investment Officer, and I want to provide a brief market update as we get into the final few months of 2024. So markets kicked off the third quarter with a continuation of the first half rally, driven by strong second quarter earnings and positive economic data. But both stocks and bonds had some turbulence as concerns grew over the high costs of artificial intelligence development and whether or not future revenues would justify the significant investments that tech companies have been making in the space. And that led to an intense rotation within the S&P 500 away from the tech-heavy sector, which weighed on the broader market as a whole. Then the July jobs report released in early August showed the unemployment rate increasing from 4.1% to 4.3%. And that raised fears that the Fed had maybe delayed rate cuts for too long, potentially risking a recession. So those few factors contributed to the S&P 500 declining about 8% from mid-July to early August. But markets eventually bounced back as economic data improved. And adding to that momentum, on September 18th, the Fed cut rates for the first time in 4 years and promised additional rate cuts before year end, which helped push the S&P 500 to new highs. But now, with the start of that rate cutting cycle behind us, and as we progress through the fourth quarter, focus is shifting to economic growth and politics. Now, although the markets have responded favorably to the Fed's initial 50 basis point rate cut in September, the market's longer-term response still depends heavily on whether or not a recession materializes after that first cut. Historically, in looking at previous rate cutting cycles, markets gain about 23% on average over the next 12 months if rate cuts stimulate economic growth, but decline about 4% on average over the next 12 months if a recession hits. In looking at the economy now, areas like manufacturing and housing are still being negatively impacted by higher rates, but consumer spending has remained strong, and that's kept a recession at bay so far. Finally, political uncertainty leading up to the US election and ongoing geopolitical risks in Ukraine and the Middle East still have the potential to spark significant volatility despite the market's resiliency all year. So the key questions over the next 6 months are: how far will the Fed cut rates and how the economy will respond? So our team is continuing to monitor the data to assess the impact that those rate cuts are having on economic growth. Thank you for listening, and if you have any questions about your portfolios, feel free to reach out to your SFMG team. Thank you.